Hi and welcome to the Market Alert for Thursday, the 29th of September 2022. Well, what a day, eh? As I said yesterday that I couldn't see how the Bank of England could wait until the 3rd of November before they make a interest rate decision. Of course, they didn't do that yesterday, but I was surprised to see them intervene and come back with QE in all of its form and glory. Just incredible. They've printed 65 billion to bail out the gilt markets to stabilise the interest rates, and as all the headlines point to this, stocks and bonds rallied following the Bank of England's gilt purchase announcement. Bank of England intervention catalyses historic bond bid and risk appetite. And just move this down a bit so you can see that one. We've got behind the Bank of England panic billions in margin calls, death spiralling into complete bond market collapse. Bank of England capitulates, restarts QE to significant dysfunction in bond market, material risk to financial stability. This was the headline on Sky. Pension funds would have collapsed today without Bank of England action. And what an absolute clown show, my favourite one. The Bank of England became the first central bank to bend the knee back to markets, and FCI forced to expand their balance sheet by 65 billion at a time they're supposed to be trying to tighten monetary policy and lean into inflation. So we've just created more inflation in order to save the gilt market, which, obviously not got any choice, have they? So we're back to QE, in a sense, buying up gilts, long-dated gilts. And the Chancellor says it's temporary. Well, we know what temporary means when the government say it's temporary, don't we? So, yeah, what an absolute show that we had yesterday. I'll refrain from using expletives, but wow. Anyway, what other economic news have we got today that may move the markets? Not I suspect that they will. We'll have a quick look anyway. Looks like we've got some flash news today. These are the wrong times on here, aren't they? Let me just redo this. There we go. Right, so we've got Spanish flash, Italian bond auction as well. The Italians have got problems with the yields as well, rising rapidly. Final GDP for the US today. Let's forecast the same. I've got a couple of central bankers again as well. So I don't think these are going to make much difference to the markets, to be honest with you. In the gold-silver ratio, we're moving down yesterday because obviously what the Bank of England have done is highly inflationary. This sent the dollar down and the pound up, and also the metals up as well. So in the pound yesterday, you can see the market moving up, but overnight the pound is down back towards the 5-bar moving average. And I hate to tell you this, Quasi, but when the US increase interest rates in the next month and we see the dollar rise, the pound is going to come under pressure once more. So I think you'd be printing a bit more than 65 billion. This is not over by a long shot at all, because now he's obviously creating more inflation. So the pound down on the overnight, and even the market's reaction, as you can see there, it shot up 100, 200, 250 points, hit the 200 MA and came all the way back down and went down in the opposite direction. It was only later when the dollar started to move lower that we saw the pound move higher. But overnight, you can see how prices have continued to move lower for the pound. We've had a bit of a rally off the 200 MA, but not convincing move to the upside there. All you need is a rally in the dollar, and you'll be seeing the pound move lower. But the market was not convinced by this yesterday, and I don't think any of us are convinced, because, like I say, they've printed 65 billion to support the gilt market, and now they're going to have to continue to do it in order to support the pound, because the US hasn't finished raising rates, and that's going to rally the dollar and put pressure on the pound. So we're nowhere near out of the woods with this yet. In the GBP, JPY, similar picture. You can see the market rallying yesterday down on the overnight. Again, big swing up to the 200 MA, back down, and then you saw the market moving higher there. So yeah, that was the currencies reaction. Let's have a look at the stock markets. And in the Dow, you can see there we moved sharply to the upside yesterday. QE is positive for the markets, but given it's only the Bank of England that are doing it at the moment, we'll see how much strength this has actually got to continue to move to the upside. You can see that we're back to 38% retracement of the recent down move. I don't know how long this will move to the upside. We might get another day or two before the market then realises that it's inflationary. We're going to get more rate hikes, and then we'll see the market come back and take out this low here. In the 30-minute chart, there was a huge spike up, and then we had 974 points in total from the base of this move to the end of yesterday's session. Overnight prices are sideways, and I wouldn't be at all surprised to see yesterday's high attacked when the futures open in Germany at 7 a.m. They'll all follow suit, and if they don't do it then, they'll do it as we go into lunchtime when the New York futures traders come on stream. German DAX, well, they're all stock markets showing the same picture, of course, moving back to the upside there. It's actually back, if we look there, 89%, 78 area from the last point that was left behind and where the market dropped down to yesterday. So 78%, 89 there. If we take out these areas, then let me just redraw this. We'll end up with a similar picture to what we've got in the Dow. So these will be the areas of resistance under 78, tying in with the 20-bar moving average there. So looking in detail yesterday, the market futures, we moved higher, traded sideways, then came back. Cash market open, did a straight reversal down to the S1 where it was oversold, then back, and then stuck in a range, and then sold off sharply, and we saw the market then move to the upside. I happened to just come back in after this had happened, and I thought, well, this is complete and utter nonsense. Surely the stock market can't hold with this ab reaction to and from the Bank of England. So I did a short down to the low, and then got out. Didn't do any more trades as I was preoccupied with other things, and then the market moving back to the upside, as you can see there, all the way through the evening, following the Dow as it put on those 900 points. But the results so far this week, as you can see there, yesterday over 400 in profits, 14.66, and we've got 82. Well, it's more like 83, 17 win-loss ratio there. So nice week, thanks to the Bank of England yesterday, and moving again to the upside quite nicely. So it's been a good week. In the S&P, again, same as all of the other markets, you can see there rallying off the low, as did all the other stock markets, and continuing to move to the upside there. At the moment, sitting on yesterday's close, 20-bar moving average and 5-bar moving average, desperately to move higher. Again, watch the high of yesterday. It's going to be interesting there. And in the daily chart for the FTSE 100, a lot of movement yesterday, which you'd expect. We sold off sharply, retraced at the S2, and then wallop up over 100 points. Big move in 30 minutes for the FTSE, and we see the market moving. And also, interestingly, this is the one that's closest to its previous day's high at the moment. So again, it'll be interesting to see how the FTSE pans out today as well. And finally, let's just have a look at the dollar to start with. You can see the dollar down yesterday, but already starting to make its way back. It's not going to give up the ghost because the Bank of England has printed 65 billion to buy bonds in pension funds. It's going to continue to move to the upside, as I said earlier. The Fed are going to continue to raise rates. That's bullish for the dollar. It's going to be bearish for the pound. And I wouldn't be at all surprised if we don't go to parity and create absolute carnage. The metals responded well, but overnight already you can see that what's happened is already been absorbed by the market. So, like I say, how strong are the legs of the stock markets to continue moving when there is a potential crisis in the background? But yesterday, silver managing to move back up sharply yesterday off the 89% retracement. You see the reaction there, bit of a pullback and then moving higher. The same for gold, also moving up strongly yesterday, and there in the 30-minute chart as well. Big move to the upside. And then finally, crude oil also moving higher, but not because of the crisis, but because there was a reduction in the stockpiling of crude oil yesterday. Should have come out at 2 million barrels in supply, came out at minus 200,000, if I recall correctly, of a shortage. So that's why you saw crude oil moving to the upside yesterday. So there we go, an interesting day, a memorable day, and I think we're going to get a few more of those as we go forward. So let's see what happens today. And I'll report back on it tomorrow. So have a great day. And as ever, thanks for watching. See you in the next.